Hello, all you lovely people out there. How are you all doing? I'm Kate Hill and I am here to give you the best, unbiased and honest commentary about our property markets, along with some fantastic hints and tips. So stay tuned for all your latest property news. Okay, let's get on with it. Flooding and torrential downpours along the east coast of Australia actually did very little to dampen enthusiasm, pardon the pun, for the auction markets last weekend. The number of properties offered for auction dropped very slightly compared with the previous week, but there were still a healthy 2,945 properties put under the hammer across Australia. Results posted by CoreLogic show Sydney recorded a slightly lower clearance rate of 75%, while Melbourne was also slightly down to 71%. Even though Brisbane was hard hit by flooding, it recorded an auction clearance rate of 70% from 180 auctions, while Adelaide recorded the highest clearance rate of 82% based on 194 auctions. Keep in mind that auctions are not the typical method of sale in those two cities. Most properties are sold by private treaty. Canberra's clearance rate was 76% based on 140 auctions. The research website SQM say that there are still more properties being taken to auction than at the same time last year. They say the drop in the number of properties being taken to auction last week was reflective of the general seasonal slowdown in auctions at the start of March. None of this, of course, takes into account the number of properties sold overall. This is purely auction figures only. Property owners are shopping around for better finance deals, with Australian Bureau of Statistics figures revealing $14.3 billion worth of refinanced loans in January. That's a lot of loans. Of that, $9.2 billion were owner-occupiers refinancing their loans, with the remaining $5.1 billion coming from investors. These figures show that refinancing levels are over 18% higher than at the same time in 2021, while a record $180 billion worth of loans were refinanced in 21. Those considering taking advantage of good rates on offer will need a loan-to-value ratio of more than 80%, while for borrowers locked into a fixed interest rate, the penalty for breaking that may not make it worthwhile. You'll need to talk to your finance professionals about that. Now, most banks will seriously consider requests from current borrowers to match fees and rates offered by other banks. I actually did this myself quite recently, in an effort to keep their customers on the books. Now, this is called speaking with the customer retention department. Everyone take note of that. Those borrowers who do get lower interest rates can shave years off their loans and save hundreds of thousands of dollars in the long run if they maintain the higher level of repayments. Again, talk to your finance professionals about all of those things. Property listings are on the increase, with SQM research figures showing a 6.8% lift in the number of properties for sale. Nationally, residential property listings hit 214,000 in February, which was up from 200,000 in January. New listings in February rose the most in Canberra, up by 86%, followed by Sydney, which was up 81%. But new listings in February were still only slightly higher than February 21. The figures show that the number of properties sitting on the market for more than 180 days dropped by 0.6% in February and 48% on the same time last year. Nationally, new listings, which is less than 30 days, increased 62% in February to 79,000. Properties on the market, which is up 4.3% over the year. The increase in listings has done very little to dampen price growth, with asking prices up 1.8% for houses, 3.6% for units in February. In the last 12 months, asking prices for houses increased 22.5% and for units 13.6%. Basically, listing numbers are still not increasing enough to take the heat out of all that demand in the market. The tight rental market means that the number of people in rental stress increased substantially in the past 12 months. At the same time, according to ME Bank's Household Financial Comfort Report, mortgage stress actually reduced. The report surveyed 1,500 Australian households and found that 67% were in rental stress as their rent exceeded a third of their household disposable income. Now, this is an important figure because it's typically how property managers will assess potential tenants' ability to afford your rental property. Almost a fifth of renters were in extreme rental stress, putting more than 60% of their income towards rent. That level was 12% just 12 months ago. The report says that rents are rising faster than incomes and renters are struggling to keep up with that and other cost of living increases. But it did find that the number of owners dealing with mortgage stress dropped to 35% compared with 37% a year ago. ME Bank says on the surface, the financial comfort of the average Australian looks better than ever, but it is fragile. Despite constant media speculation of a rise, the RBA has kept the official cash rate on hold, 0.1% for another month. Mortgage Choice say that although there was not enough wage growth to support a rise in March, strong economic conditions suggest there is potential for an interest rate rise later in the year. Some banks have already started to increase fixed rates independently. They said that Mortgage Choice monthly home loan approval data reveals that demand for fixed rate mortgages dropped to its lowest level in 5 months in February, with only 26% of borrowers opting to fix part or all of their mortgage, compared to 43% in September 21. Economists, our favourite type of speculator, had expected several rate rises this year, but that was of course before the war started in the Ukraine. They think that the RBA will now sit on their hands a little longer than they otherwise would have done. Now, we will keep you posted on all things property from around Australia as our year progresses. Please don't forget to just click that subscribe button. I really do appreciate it. Give me a little like if you're enjoying all the free content, and I will see you again really soon. Bye.